Hello, everybody. It's your girl Buffy here with the weekly Market Insight series that's brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. So without any delay, let's get right into it. U.S. stocks continue to rally this week. A strong earnings season continued on Wall Street, boosting the S&P 500 and the NASDAQ composite to new records. Treasuries tumbled as strong economic data and comments from Fed Chair Jerome Powell dwindled expectations of interest rate cuts. Meanwhile, governments were rushing to reach trade agreements ahead of the August 1st deadline. In a widely expected decision, the Federal Reserve kept its benchmark interest rate in a range of 4.25% to 4.5%. Fed Chair Powell urged patience in the face of a strong labor market and above target inflation at his press conference. He also said that there has been no decision made on how the central bank will proceed at its September meeting, dampening hopes of a rate cut. The vote was 9-2 in favor, marking the first time multiple governors were in opposition since 1993. The Commerce Department reported that GDP rose at an annual rate of 3% in the second quarter, beating estimates following a 0.5% contraction in the first quarter. While exports declined by 1.8%, the surge in real GDP was largely attributed to a sharp 30.3% drop in imports, which contributes positively to net exports. Consumer spending also rose by 1.4% during the quarter. The Fed's preferred inflation gauge rose at one of the fastest monthly rates this year. The Personal Consumption Expenditures Price Index increased by 0.3% in June and 2.6% year over year. Core PCE, which excludes food and energy, also rose 0.3% month over month and 2.8% annually, underscoring the ongoing challenges in bringing inflation down to the Fed's 2% target. Personal income and spending both rose by 0.3% for the month. The U.S. advanced international goods trade deficit unexpectedly narrowed by 10.8% to $86 billion in June. Exports fell by 0.6% during the month, while imports declined sharply by 4.2%. Wholesale inventories rose 0.2% in June, following a 0.3% decrease in May and were 1.5% higher than a year earlier. Retail inventories increased by 0.3% month over month and were 2.5% higher than in June of last year. American sentiment toward the U.S. economy improved in July. The Conference Board Consumer Confidence Index rose by 2 points, in line with analysts' expectations. The Expectations Index reached its highest level since February, jumping 4.5 points to 74, though it is still below the key 80 threshold, often seen as a recession signal. Meanwhile, the Present Situation Index dipped by 1.5 points to 131.5. The number of homes under purchasing contracts unexpectedly decreased in June, dragged down by high prices and persisting high mortgage rates. The NAR said its pending home sales index slid by 0.8% to 72 during the month after climbing by 1.8% in May. Consensus forecasts predicted a 0.2% rise during the month. Pending home sales also fell year to year after tumbling by 2.8%. Home prices in the U.S. slowed down for the third straight month in May. The CoreLogic Case-Shiller Home Price Index slipped by 0.3% from April. Annually, home prices rose by 2.3%, the smallest increase since July 2023 and the fourth straight month of declines. MBA mortgage applications fell to their lowest level since May after dropping by 3.8% during the week ending of July 25th. Refinance activity slipped by 1% from the previous week, but was still 30% higher compared to a year ago. The purchase index fell by 6% week to week, but was 17% higher compared to the same week in 2024. The average 30-year fixed rate was little changed as it hovered around 6.8%. U.S. labor market data sent mixed signals this month. Private sector hiring rebounded, with ADP reporting a gain of 104,000 jobs, better than the expected 76,000 after a rare contraction in June. The pace remained well below last year's average, suggesting weaker labor demand. Meanwhile, job openings fell in June to 7.4 million, missing forecasts and declining from 7.7 million in May. The hiring rate also dropped by 3.3%, while the quit rate held steady at 2%. Initial jobless claims edged up slightly to 218,000 in the week ending July 26, while continuing claims held it steady at a 1.9 million during the week ending on July 19th. And well, my friends, that's it for this week. As always, stay locked in so you stay current on market news. As always, if you like the video, please hit the like button, share it, and subscribe. Hit the notification bell too, so you know when we upload a new video. My hope is always to keep you in the know on the latest world news and, of course, our pricing incentives. Have a prosperous weekend, everybody. Buffy out.